Hi everybody, it's me, Greg Manarino. How are you today? Alright my friends, I'm going to attempt today to cover some questions I've gotten from a lot of you out there. Overwhelmingly, they're regarding gold and silver and some about trading. So I want to talk about that here. I think it's important. Again, when I see a theme like this, and my email box is full almost every minute of the day from the questions I get from you guys out there, and I appreciate all of you. I really do. If I have not answered you personally, please forgive me regarding that issue. But let's talk about this here. It seems that many of you are very concerned about another smackdown regarding the price of paper gold and silver, GLD and SLV. If you follow this blog, or if you listen to me on some recent interviews, you've probably heard me say that I'm not convinced that we've hit a bottom here. There are many reasons for that, some I've gone over, but it is my view at this time that it is a very strong possibility we could see yet another significant smackdown regarding the price, the paper price of GLD and SLV. And let me put a perspective on this why. It seems right now the market is more of a risk on trade. In other words, people want to be in equities. Okay. I've been saying for a while now that I think the markets are going to rise. The Federal Reserve is going to backstop anything. They're going to continue to front run the markets. They're going to continue their Ponzi scheme, their conflict of interest. This, it's incredible what they're doing here to keep the equity markets pumped up. Is it a pump and dump? Many of you have asked me that too. There is going to be a dump time, but right now I think we need to ride this Bernanke wave. So what does that mean for paper gold and paper silver? People are going to more or less shy away from it. Again, I don't want you really to focus on the spot price. I've been over that countless times, and my advice has always been to dollar cost average into the metals. Don't go all in at one time. This is something I've been doing for years. I think it's a good strategy here. But let's talk about this. If, and again, I think there's a strong possibility here that we see another smackdown, which could possibly test the recent lows or maybe even go below that. It's not going to affect the bullion price or the actual metal price all that much. Why? Well, because we're going to see premiums rise. So it doesn't matter. And I really want all of you out there that have written to me about this to try to disconnect yourself from the spot price and keep your eye on the ball. Understand where this is all going here. You know, there's a lot of people that write on this blog, and they make comments like, you know, everything is fine, the economy is doing well, and these are in the box thinkers. They don't realize what's going on outside the United States. They don't realize that if it were not for the Federal Reserve's actions, we might be in a third world country right now. And I think we're definitely on a path to financial Armageddon in many ways. Understand this, everyone. The Federal Reserve has gone all in on this money printing into infinity scheme. If it doesn't work, well, you figure that out. They will not admit that it's not working. They're going to twist and bend and skew all of the numbers every which way they possibly can. Understand, just let's look at a few things that have gone on lately. GDP, pathetic. 2.5 at best. We have manufacturing index came in lower than expectations, as usual. We get companies, more than half of them, missing their top line or their revenue. We get this jobs report, absolutely absurd. They're saying they add 165,000 jobs. Meanwhile, workers are working less hours. If you equate that out, it's a loss of over 500,000 jobs, but the market continues to rally. So we have a risk on trade, and there's other reasons why I think that gold and silver may fall here. The central banks, institutions, they play games with this stuff. They lease out the gold, they swap it out.